Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel L. Conan, along with Spencer Israel, and we have Andrew Chanin on the line. He's the CEO of PureFunds. And Andrew, is this correct? Did you guys took in $1 billion in the first 7 months?
That is correct, of our cybersecurity fund.
Oh, my Lord. So tell us about it. Hack. How's that? It looks like that thing's getting hacked.
First off, thanks so much for having me. I'm thrilled to be on the show today. We're actually coming up on our 1-year anniversary of the launch of our cybersecurity ETF, Hack, HACK. It's been just a fantastic kind of turnaround year for the company, and I think really getting a lot of people interested in the industry. It's kind of been Hack's kind of become this fund that seems bigger than a fund, and has really garnered a lot of attention from all types of investors in the community, and have really it's kind of helped to shed a lot of light and education on ETFs and the launch of ETFs, how the whole process works. But it's really been something that I think investors chairmen of boards and chief information security officers, technology officers, all these people that deal with cybersecurity on a daily basis, finally had a diversified fund of cybersecurity companies that they could invest in. And, it was the perfect storm, launching about 2 weeks before the Sony attack. And it has really just been on the front pages ever since.
And you kind of came up with your own formula here for this. Can, in the first of the kind thematic tech funds, can you talk about that formula a little bit without giving away your secret sauce?
Right. So when first launching PureFunds, we kind of had this realization. I came from the trading side of ETFs as a market maker and a prop trader, and really kind of was on the front lines of watching funds be launched, and kind of saw what types of things worked, what kind of things didn't, and with a pretty accurate success ratio, was able to look at just the name of a fund and be able to figure out if it had any chance to succeed or not. And kind of looking through that history had kind of filled me with some ideas of what needs to be done, what shouldn't be done when trying to bring out a concept. And first and foremost, it's the idea. And when you have so many competitors, and I just read there are now over 6,000 ETFs and ETPs around the world, with over $3 trillion invested in them right now. And how do you get an ETF out there? And I think for me, it was not being second to market. It was trying to figure out what these emerging growth themes are that people are interested in, that are topical, that people want investment exposure to, but they don't necessarily have the time or the education or wherever it is to pick the stocks that make up this broader theme. And I think a lot of investors were either kind of forced into this box of saying, okay, I'm going to try to pick the best of breed company and hope I get it right, or I'm going to invest in a broad-based mutual fund or ETF and hope that it goes in the direction of the theme that I'm looking to do. But when you deal with either of those, you look at a broad-based theme and you say, okay, well, I want to invest in cybersecurity. Well, you're getting definitely less than 5% of that exposure in this broad-based tech ETF that actually has exposure to cybersecurity. So you're not really getting that exposure to that tactical theme that you want. And on the other side, if you pick individual companies, you have a lot of individual company risk. So we're looking at these really exciting growth areas, specifically in technology, but not limited to technology, that we think investors are looking at for the long haul, and are these kind of sub-industries that we think are going to change the way that the world functions in the future, the way people are connected, the way companies do business with each other and with their clients. And we think that we have a couple funds right out there right now with our big data fund and our mobile payments fund, and obviously our cybersecurity fund, and look to keep on bringing out these first mover ideas as we progress.
Moving into this hack thing, I mean, I don't know if you can comment. Looks like it's just kind of grinding here between 25.5 and 28. Any technical thoughts here on the fund?
Yeah, it's a really interesting industry, and I think it's one where a lot of people wanted exposure to. And like we said, you could go broad-based or you could try to pick the individual companies, but this is still in a very early stage industry. Yes, it's been around since the time that people started using the internet, and even before then. But this is something where that there are still a lot of companies out there. There are more companies we see coming down the market. We're seeing a lot of M&A in the smaller companies. We haven't yet seen the larger publicly traded companies get acquired yet by the more diversified technology and defense companies. But I think that's kind of something there. I think we're seeing support at these current levels because people believe that regulation will be coming down the pipeline, and that certain minimum requirements on spending and how you protect your customers' information, your own information. And I think a lot of people believe that they'll be forced spending into more cybersecurity. So we saw that we're above the level where we launched at a year ago, price wise. But I think that there are a lot of fundamentals that people are still grasping. And being that it is such a volatile industry, we saw during earnings season, we saw some companies get cut by 20%. We also saw some companies go up by 20%. So trying to pick an individual company, it can be so tough in a volatile area like this that we're really excited to be providing this investment vehicle where people can get exposure to over 30 companies from around the world.
All right, move on. That's not your only ETF. You have a big data ETF, BDAT. Just talk about the launch in that and some of the top components.
Sure. So, another fund that we're thrilled to bring to the market. First to market is very important to us. Big data is a theme that we see, changing the world, changing how companies are able to better provide services to their clients, better allocate resources, make decisions. And it is, kind of one of those broader kind of topics, but it is extremely important. We're seeing companies around the world increase spending on big data solutions because they believe that that's the way that they're going to make better decisions going forward. So kind of ideas of, companies that are considered big data companies to us. Google is one of the biggest big data companies out there. Yes, they started as a search engine, but the way that they're making their money now is from the data that they have. So through search, they have more searches coming in every single day, and with that information, they're able to very well targeted this approach that they can provide clients of theirs that want to advertise to people using some of the Google platforms. Because of all this information they have, this huge database that they're sitting on, which is growing through videos on YouTube, which is what they own as well, and AdWords, they're able to sell clients that want this very targeted advertising approach.
All right, Andrew, so, you just opened up a big can of worms here with me. Okay, are you ready?
Thing.
Are you ready? Is Twitter in this? Is Twitter in this ETF?
Twitter is in this ETF, absolutely.
Okay. So what the heck is going on with that company? I mean, I think they have the best data. They have the relationship with Google. I mean, you talk about data and information. Yeah, it's not as from as many monthly average users as Wall Street wants. But when are they finally going to start capitalizing on the data that they have?
Yeah, and that's kind of what we like about the approach of using an ETF, where you can have, multiple companies, because it's tough to see who that leader is going to be immediately. But if you look at Twitter, they start off as a social media company, like Facebook did, like Google started off as a search engine. And now what you're realizing is, okay, yes, it's fantastic for getting my news in real time and finding new opinions and aggregating those and things like that. But at the heart of it, it's big data. So every single tweet that's going out, whether it's one character to 140, that's the data that Twitter is holding on to. And where they're making their money right now is from advertisers just like Google. So if you wanted to advertise your talk show to a very well targeted group, you can do that on Twitter, and that's where they're seeing increased revenues coming in from. So it's this advertising from this amazing data that they have. And when are they going to start seeing value from this data? I think they already are from the advertising base, helping them bring in these initial revenues. But if you look at something like Facebook, what were they able to do with the data that they had? Well, Facebook started off saying, hey, we're going to connect people from around the world so they can share things. And what they were able to do with the photos that they had with their acquisition of Instagram is now they have the largest database of photos. And from that, they're able to create one of the best facial recognition softwares ever developed. Now, what could Twitter do with it? Well, we know that high-frequency traders are building algorithms based on tweets. That's just one way that people are using Twitter themselves to potentially profit. Now, what other things will they be able to sell from that? I think that's kind of the exciting thing about it. I think, Facebook didn't set off to become, this facial recognition technology, but they have it because of the data that they have. I think, it's yes, you could be in the early stages, but the companies that have the data have potential value to unlock. So to answer your question, when will that be unlocked? I'd say we're already starting to see that through advertising, but I think the years down the road potential creations, or maybe even months down the road, with the more data that they have, the more ability there is, I believe, to extract value.
Okay, we got a question out of the chat here from Bobby Bid. How much leverage do the hack and BDAT funds employ? How much leverage do your ETFs employ?
These funds do not use any leverage. It's all in-kind equity. Each of the funds that we have in the technology space are big data, cybersecurity, mobile payments, have over 30 companies, publicly traded companies from around the world, and it's that and a small cash position typically.
And we're on the line with Andrew Chanin. He's the CEO of PureFunds, creating some new ETFs. Okay, your final one to talk about here. Pay, your mobile payments ETF. How's that going?
Right, so the ticker on that one is IPAY, and another one of these areas that we're so excited about. What we're seeing is that consumers around the world are looking for payment methods that reduce the time of transaction, the cost of transaction, barriers to the transaction, and ease of use. And that is exactly what mobile payments are. To us, mobile payments are mobile, electronic, and digital payments and transactions companies. So you have your card networks that everyone, I'm sure, is familiar with, your Amex, your Visas, MasterCard, Discover. And we also have PayPal, which is a massive processor. And we've seen a lot of IPOs coming into the market just recently, not currently in the fund, but we're seeing a lot of attention coming to this space. And if you look at the world as a big pie of payments and transactions, you'll see that over the last several years, mobile has been taking a bigger piece of that pie. And it's for those reasons that individuals want this easier, lower cost, hassle-free kind of type of payment. And because they're taking this larger market share, it's been helping a lot of these companies grow. So we think this is another one of those fairly early stages, but we're seeing companies, governments, individuals making this movement pretty quickly, which is really exciting. We're happy to be on the forefront of this market with this ETF.
And top components in this one?
Right now, without looking, it's the card networks. So probably the Visas, PayPal, MasterCards.
What about Apple?
What
about Apple?
The index is all rebalanced quarterly. Sorry, what was that?
What about Apple?
Apple, because it isn't pure play enough, it is not in the fund currently. And what is very important to our index provider that does all the individual component selection is trying to find those pure play companies that give you actual exposure to that theme. So sure, people may say, oh, well, what about Google? What about Apple? And the fact of the matter is they're not making a significant percentage of their revenues derived from mobile payments. But certainly that could change in the future, and they would be up for reconsideration. But at the moment, the index provider is really looking to get those companies that are deriving a high percentage of their revenues from either cybersecurity, mobile payments.
Aren't there too many? I mean, isn't there like Venmo? Isn't there a bunch of smaller ones too? Isn't it a pretty fragmented market? Is it really hard to get a dominant player?
Well, some of the smaller ones are actually owned by larger companies like PayPal. But we saw Square just IPO. We saw KKR just IPO their first beta. And this is something that is ripe for disruption. And the larger companies want to do it, and the smaller companies are doing it as well. So, I think that's kind of why we're at the fairly early stages, which makes it risky to try to say, okay, I'm going to just invest in one of them or two of them because those are going to be the winners. I think even the companies that are the winners might not even know that they're the winners yet, or those companies haven't even emerged yet. But by investing in a basket of over 30 companies that specialize in this area, that's rebalanced, professionally managed, and rebalanced quarterly, I think can provide the opportunity for investors to get exposure to the industry and hopefully not have to suffer from being all in on one company and that company doesn't pan out to be the winner.
One final question for you. Is VNTV in your mobile payment fund?
Vantiv, I believe, is in the fund. It is in the fund.
It is. Okay. All right.
And for all of our holdings, you can go to our website. We update it daily, and you can see the holdings of the previous close. So you can see for all of our funds, all the holdings and the percentage weightings.
All right. I didn't even get to talk to you about being a market maker on the floor for Kellogg Capital Group or any of that good stuff. We're going to get you back on real soon. Andrew Chanin, CEO of PureFunds.
Thanks so much for the time, guys. Look forward to being back on.